So most of us have money that we're thinking about that we need for short term, but then we have money that we want to invest for the long term. And some of you have talked about retirement savings and building wealth. So for money, so think of it might be helpful to kind of think of your money in terms of buckets. So, the first bucket would be money that you can't afford to lose. So money that you need to pay your rent, money that you need for, maybe you're trying to save to buy a car, or money you need for any purpose that you can't afford to lose the money. And you need it relatively soon. You might need it in a month, you might need it in 3 months, you might need it in 6 months. That kind of money, you don't want to be investing. That money stays in a savings account or a money market fund. And do most of you have an account like that? So do your paychecks go into a money? How do you have your paychecks handled? They go into a money market account?
Oh, not a money market account, just checking.
A savings account?
Yeah, checking and savings.
Okay. Okay.
I will go to deposit and then checkings, and then I'll put it in savings.
Great.
Like,
same thing with you, Julia. Okay.
Yeah, I have Ally for
Oh,
the money
good.
market.
That's great. Ally pays a lot.
Yeah, Ally's good. And then, but I would say, but Capital One 360 is
Yep.
also a money market. So
Yep.
yeah, automatically
Capital
all in savings. Mhm.
Those two are great. You've actually picked the two best. So for like money that you can't afford to lose, but that you want to earn something on, and the money market rates are going up a little bit. They don't pay a whole lot, but they pay a little bit. So maybe a 0.25% or 0.5%, but then you can access it for easily, and typically at not a no cost or a nominal cost, right? Do you pay any fees, Julia? I'm sorry. No. Okay. So do all of you have access to some sort of money market account or savings account or checking account? Yeah. Charles, you too? Okay. Well, yes. Excellent. Good. Good. So when you think about the money that you have, the money that you know you're going to need for something soon, you're going to keep in your checking account. Then you might have money that you need maybe in a year or two, and then there might be money that you can afford to invest for the longer term. So that's your, Julia's talking about retirement accounts or money that you're pretty sure that you might not need. When you think of your funds, what we really want to focus on is that money that you're pretty confident you're not going to need for a couple years. Okay, because everything else is going to stay in the money market fund. And the reason that we're saying that is the way that you build wealth is by investing in the stock market. But when you invest in the stock market, it's the return, it goes up and down over the short term, right? And we have some materials that we can leave with you, right? Over the long run, the stock market reflects the biggest companies in the United States. And when companies like Apple, Johnson & Johnson, and McDonald's, and when their earnings go up, the price of the shares go up. And all those companies together are referred to as the stock market. So over the long run, the stock market tends to go up because companies' earnings rise over time, and companies' earnings are a reflection of how well our economy is doing. So the long-term trend is generally very positive and up. Month to month, sometimes even year to year, it can be highly variable. And we've had a very volatile couple of years with COVID, right? We had the market drop dramatically. We had the market rise dramatically. And actually, the last couple of years are just a great microcosm of how it's impossible to try to time the market sometimes. And so the reason we say we want you to have only invest money that you can invest for a couple of years is we don't want you to invest money in a handful of stocks and then have the market go down, and you need that money for a purpose. You need it to buy a car, you need it for college, you need it for, you know, there was a trip you were saving for, or just anything that would require you to take your money out. So usually, if you can invest for 2 to 3 years, usually the market, even when it goes down, it recovers within that period of time. So what we're going to try to be talking about today is money that you can invest for that, you know, 2 to 3+ year time period. Does that make sense? And are you clear about what are you going to do with the money that you need sooner than that? Where's that going?
In a saving or money making.
Exactly. And you're going to try and be picky about the account you use, because some banks charge fees. So make sure you're using like a no fee account, and Ally and Capital One 360 are great, are really great examples. They pay you a lot, and they don't have any fees attached. Okay. Kristin, anything you want to add there?
No, I think the buckets are is helpful. And I think also this is one of those healthy habits around investing in personal wealth.
And that's going to be the case for the rest of your life, right? You're always going to have short-term needs and long-term needs. And as time goes on, you're going to, if you're, you know, Karen, you're asking about books, we will give you some book and YouTube recommendations. One of the things you're going to read about is always having an emergency fund. And so once, and that's why we're talking about this bucket, this short-term bucket. And that emergency fund is, they'll often say you should have 3 to 6 months worth of living expenses in that bucket. So if you're thinking about your rent, if you have a car payment, what do you spend on food? That you want to make sure that if something happens, if you lose your job, if you get sick, that you have some money to fall back on. So that's the money that's in that checking account or savings account. And it's not sexy or glamorous, but it's part of kind of creating financial security for yourself. And that's really important. You're not going to build wealth with it, but you're going to feel secure. Okay, so any questions about shorter term money? Because it's important. It's not sexy, but it's important. Okay. All right. Let's talk about longer term investing. Do you want, and one of the things that I think is really a great way to kind of identify companies that you might have an interest in is to think about where you spend your money and where you see your peers spending their money. And some of you are a little older, but believe it or not, like the younger cohort, the 16 to 20-year-olds are one of the demographics that big money managers study, because younger people have often have more discretionary dollars. So how many of you worked during high school or work now? I know but the scholars that are still in high school, do you work? Do you have a job? One, you don't? Okay. Joshua? Okay. Joshua, do you work right now?
No, I'm in 10th grade.
You're
But
10th grade. Yeah, I know. Yeah.
I
Okay.
don't have a job.
Not yet. Okay. But the reason I was asking that is that young people your age are at the forefront of the trends that often are the trends that are long lasting, because you adapt much more quickly. And so there was a survey that we found of where young people are spending their money, what brands they find attractive. And do you think we could pull that up, Kristin? And the reason we wanted to show that to you is often it's those, just to kind of get your feedback, but also to see where young people are spending their money, because these might be ideas of industries and companies where you might want to be investing. And so what this was a survey that an investment firm did, and they were interviewing teens. I think they were from 16 to 18. And they identified that their spending, they looked at their discretionary spending. So discretionary means money that doesn't go towards food or rent, right? So you think of it as, we all have things we have to spend money on to live. But if you have an extra dollar beyond taking care of your basic needs, where would you spend it? And so what was identified was the money went to social media, right? So Snapchat, Twitter, and we can look at this. It went to crypto, went to video games. Among young women, it went to clothing and snacks, and then online shopping. And I bet none of this surprises you, right? I mean, is there anything here that seems like a big surprise?
Mhm.
But then what was really cool is they went through the companies that were most popular and the brands. And so I thought this was really interesting. And I'd love to know what you guys think. So they started with very big, what are called global lifestyle brands, right? Companies that are basically in fashion, and global meaning that they're in the US and outside of the US. So they're international companies and they have international appeal. So no surprise, Nike, Crocs, Lululemon, and AKA Princess Polly. And I'd love to know what you guys think. Like, do you see your peers spending money on any products by these companies?
Mhm.
Everyone in college has Crocs. Like
Everybody in college has Crocs?
yeah, everyone wears Crocs.
What about Nike and Lululemon?
Yeah, those I see a lot as well.
Mhm.
What about AKA Princess Polly?
Princess Polly, I do see a lot of my friends wearing it from on Instagram, and I also see a lot of advertisements for it on Instagram. So
Yeah.
these
So,
are
I'm sorry?
I said this is very accurate.
Yeah. And some of these are really interesting brands because they tend to be they tend to have appeal, particularly things like Nike and Lululemon, kind of year in and year out. And meaning that you have confidence in the brand. You go back to them more than once, right? Like you like your Nike sneakers, you're more likely to buy another pair of Nike sneakers. I know Lululemon's pretty pricey, but it is very popular, and they keep innovating. They've come out with this new product called Mirror. Have you guys seen that advertised? So it's like it's a giant exercise mirror, and it's interactive. So the person on the other side of the mirror is your personal trainer. And so they're telling you exactly what to do. So anyway, it's an interesting brand. But let's kind of go through them, because there may be, and then we can kind of come back and talk about which ones you guys kind of relate to. So, okay, so far you think this seems on the mark. So beauty and wellness, of course, with COVID and Zoom, we're all spending all kinds of time on Zoom. So, we all want to look good. And so there's been a big surge in beauty brands. So things like Estee Lauder, Elf, Olaplex, Ulta Beauty. What do you, what, any of these names kind of resonate with you all? Which ones?
Ulta, Elf. Elf is super affordable. So I mean, that's a huge market right there.
Yeah.
I keep getting advertisements. They rolled out a line with Dunkin' Donuts, which I thought was so interesting.
Oh, really?
So
Oh,
it's
that's,
like
that is interesting.
donut themed, like a spin-off on the flavors, like, yeah.
Huh, that's interesting. Olaplex is that's kind of a new brand. It's a little pricey. I don't know if you've had any experience with that.
That's hair care. I've never heard
Yeah.
of it.
Okay,
Yeah, I've heard of it. It's like advertised in every hair salon.
yeah. So
Mm.
so kind of the reason that we're kind of just going through these is, again, the idea that brands that resonate with your age group. So if we're looking at companies where young people spend their money, and where you spend your money and where other of your peers are spending your money, often that is a good place to start as a kind of a universe of stocks that you might want to consider. So that's why we're trying to think about companies that you can relate to, where you understand the products and where you know that there's dollars being spent there. That's just kind of a reminder why we're thinking about these. So we looked at retail, we looked at beauty and wellness. So remember they said snacks. So General Mills is Natural Valley. Campbell Soups is Goldfish. So I thought this was great. Goldfish was the most preferred snacks by teens. Everybody loves Goldfish, right? And then what do you guys think about Beyond Meat?
My friends have had that a lot, like when they cook, if they're like vegan or, not eat as much meat, they'll choose Beyond Meat or Impossible Burger. So,
Yeah.
Yeah, Impossible Burger is not publicly traded yet.
Oh, okay.
But do you feel like there's a big trend towards healthy living and reducing, sustainability, issues relating to sustainability?
Yeah, I do see that.
Yeah. And that's one thing we want to just kind of spend a few minutes talking about too before we, today, is just how you all think about, how you want to think about sustainability in terms of the companies that you may invest in. Because one of the big trends, of course, is not just companies that are making money, but the companies that are making money and making the world a better place, or at least aren't exacerbating any trends that we wouldn't necessarily want to be involved in. So to in a perfect world, identify companies that are profitable, but also have, a strong social mission. And that do you feel that that's important to you all? If you had to pick between a company that was making money and a company that had a good social mission, which would you pick? Or would you want both?
I mean, to be honest, I would pick the one with the money. I mean,
Yeah.
That's okay. I mean, the goal is to try to find ones where we can do both, right?
mhm.
But, increasingly investors want companies that do both. So it's kind of it's a win-win if we can find companies that have a strong social mission, but also are profitable. So dining outside the home, of course, is still really popular. Chipotle, Starbucks, McDonald's. Does any of that just surprise any of you guys, or how do you react to those?
Seems accurate to me.
Very.
My
Do you
little sister's in the class of 2024 and she gets Chipotle, like, I feel like every other day, at least every week. So
Really? How do you feel about McDonald's? Is that still a brand that you think remains popular?
I love it, which is bad.
Same.
Nothing
And
But
wrong
like
with
I
that.
love McDonald's like coffee, late night like fries, chicken nuggets. Like it's just like a staple that like is consistent. I I can't avoid it. I can say like I won't eat it, but I'll always go back to it.
Okay,
I think
okay, that's great. That's
McDonald's app is like game changing too, which makes it.
Oh,
They're just
really?
constantly, feeding advertisements if you have the app. And there's a lot of good deals on there. So
What about the Starbucks app? Do you think that's good?
I personally, I use the Starbucks app sometimes. Actually, I used to use it a lot. And sometimes if you don't go there consistently, the stars, they call it the stars, expire.
Oh, that's
I-
annoying.
So irritated, but it's a little bit more slower on Starbucks than it is on McDonald's app.
Interesting.
Huh.
That's good to
Yeah,
know.
McDonald's has good like partnerships. I want to say like whenever like the Caps win, I get like an alert saying like it's a $1 like McDouble or something today or Big Mac. Like they base it off like local events.
Oh,
which is
that's
very
interesting. So they kind of customize it for the market you're in.
Yeah, so it's like, oh, the Wizards won yesterday. Here's like a free large fries, and I'm like, okay, like maybe I should go get it.
Yeah. Oh, that's great. That's good to know. Okay. Let's look at a few more. So the next category, relates to companies that are more in the technology area. So of course we talked about Apple. I mean, Apple's a perennial favorite. And what's been so amazing about Apple is about how the company consistently reinvents themselves, right? It used to be all you talked about was hardware, but now, right, there's Apple TV, there's Prime Video, there's Apple TV, Prime Video is Amazon. There's the watch. And so Apple increasingly is being considered as a health company. And there was a survey, there's talk in a perfect world, all of our health data would be online, right? So if we had an accident and we went to the hospital, that there'd be one place where our medical records could be accessed. So, right, they would know what blood type you were, they would know if you're allergic to certain medicines, right? And right now that doesn't exist. When you go to the hospital, they have to ask you questions. And there was a survey done where they asked consumers, who would you trust with your health information? Because if you think about it, your health information is the most personal information that any of us have. And no surprise, the number one company that individuals said they would trust with their most private information, their health data, is Apple. So Apple's just a perennial favorite. What about PayPal and Square, which is now called Block? Do you all use Venmo?
Mhm.
Yeah.
I mean,
And- Yeah.
Zelle also.
Yep. Zelle is Zelle Bank of America, Kristin?
I think it's Chase.
Chase. Okay, Chase is Bank of America. Okay. So the other big trend, I'm sure, as you all know, is the concept of a mobile wallet, right? I mean, do any of you carry a traditional wallet anymore? Yes, Isabel, you and my husband.
But I know, like, again, to my little sister, she doesn't. She just taps to pay for everything.
Yeah. Charles,
Right.
what about you?
Yeah, unfortunately, I still do.
Oh, do you? What do you keep in there?
Just my ID, cards, just a basic leather wallet.
Yeah.
It's the cartoon like one.
Oh, do you? Do you know Apple is working on an application that would be an official, it would store your driver's license in such a way that the police would recognize it and accept it along with your passport, so that you wouldn't need to physically have your driver's license with you, or physically, if you're traveling internationally, or have your passport. Because, right, that's such a pain sometimes, right? So
Not as much. I'm sorry. Go
no,
ahead.
no, please.
I was gonna say like that sounds like a very well like pitched thing, but it sounds incredibly invasive. I'm not gonna lie. Just
Really?
to have
What?
my yes,
Yeah.
like it'd be okay if can just use it to get through certain things, but I don't want them to have that all that information stored up for anyone to just be able to access.
That's a good point. There's definitely a downside to, having all your personal information stored online. Yeah, that's a really good point. I mean, the trend, so kind of we're talking about big societal trends. I mean, and the trend is towards moving everything to digital, right? Digitizing, do any of you write physical checks for anything? Isabel, you're smiling.
My mom just gave me a check because she didn't trust Zelle. So there's that.
Well, it is a little, I mean, as somebody who uses Venmo and Zelle, it is a little scary, right? When you're Venmoing
Well, she messed
somebody.
up. She had a bad experience. And she's like, I'm not doing this anymore. Because I tried.
Did she send it to the wrong person?
She sent it to the wrong email that I didn't use. So we had to like call the bank and like they had to tell her like, oh, you have to wait. The money will come back if no one claims it. I'm like, you sent it to this random email that I no longer have access to. And yeah, so there's like small like glitches like that. I mean, she got her money back, but for her,
Yeah,
like,
no, it is a little, yeah, it is a little scary. I have to say, I always kind of, I feel like whenever I do it, I'm always like, like that moment of fear that you're sending it to the wrong place, even though it's the right,
yeah,
even though it's right. So
it's a generational thing.
Yeah, it's not without risk. It's not without risk. And Square or Block, do any of you, when you go to, sometimes if you're in an Uber or if you go to a farmer's market and you go to pay and they slide your credit card, there's like there's a little white Square app that they add to their phone and you slide your credit card. Have you guys seen that?
For like small
That's
businesses, right?
I'm sorry?
Like a lot of small businesses use that.
Yeah. Yeah. Small businesses
Yeah.
like flea markets, farmers markets, cabs sometimes. So that's Square or Block. So they've really help small businesses move away from using hard currency to more digital payments, which has really helped their business, right? Because if you think about it, you typically spend more when you're charging. And Kristin, were there any others that we wanted to show here?
There was one more if we want to go through.
Oh, right.
Amazon, I'd
Go
be
ahead.
curious to hear your on Amazon. Is that a company that you all use often to purchase things, or not so much?
I do.
Karen?
Yeah, I do. And I
can
think
speak
that
for
a lot of
CDI, we do too. Go ahead. Go ahead.
Oh, I was gonna say, I think TikTok and like a lot of social media apps, like if you want to know what someone else is using, they'll have like a linked tree in their bio, and you can, if they have like their Amazon register or whatever they purchase, you can just get the same thing. So like,
Oh, is that right? So it links right to Amazon? There's a link right where you buy
Affiliate
it?
links.
Yeah.
Oh, no wonder TikTok's so dangerous.
yeah,
And what about Snap?
I don't use Snapchat anymore, but I know that a lot of teenagers do, like high schoolers still use that.
Anybody else have any comments about Snap or Amazon? So, this was just meant to kind of get you thinking about companies that are where young people typically have an interest and that are generally highly rated companies. But what we'd like to challenge you with for the next time we get together is, are there companies beyond this list that you all frequent or you see your friends frequenting that you've noticed are becoming trends? So if you think about where you're spending your money every day and every month, like, so if you think about it over the course of a week or a month, are you going to Starbucks? Are you going to McDonald's? Are you going to Chipotle? Are you, you're using your Apple phone. Who's your cell phone provider? Are you using Verizon? Are you using AT&T? Right? Are you going on a trip? Do you fly? Do you fly Southwest or JetBlue? Right? Are you, if you had to, you're going to buy your mother a Mother's Day gift, where are you going to shop? Right? Is there an aspirational purchase that are you saving your money for a purchase? What might that be? So for example, Ralph Lauren's publicly traded. That's a brand that, it's kind of an aspirational brand that's been a great performer year in and year out. I'm sorry.
Etsy. When you mentioned Mother's, I thought of
Yeah.
Etsy. Some of you all may be familiar with Etsy. And that's also kind of goes back to that, their business model of all sorts of different people can create accounts and sell their goods, and you can rate them, right? So I'm not sure if anyone's been on Etsy recently, but all the sellers have ratings and so forth. So it's a way for you to kind of do your homework, right, on the sellers. Similar to how you do your homework on stock.
What about Twitter?
One.
Are you guys on Twitter? No one wants to admit they're on Twitter. Charles, you on Twitter?
I guess this will lead me to another question, but just when you have things in the news like Elon Musk trying to buy it, how do you think that stuff like that would affect stocks for that? Or just like, I guess this leads to the general question of like understanding the news when it comes to
so that's a great question. It's really important because it can completely, so Elon Musk getting involved in Twitter has completely changed the narrative, because Twitter was was widely criticized, not making any money, and kind of considered just a kind of a cesspool, right? Because people just attack other people. And Elon Musk has really raised attention. And, of course, as you know, they've been criticized for how it seems kind of arbitrary sometimes as to who and who they've censored and why. And I think Elon Musk, because he's so well respected, has really changed the narrative on the stock. And even if he isn't successful in buying it, it has increased the company's appeal. At least I think so. What would you say, Kristin?
I think when you're seeing these headlines, I would encourage you to try to think about how that impacts the basics of the company. That's why I brought up this slide here, and I'm sure Isabel's going to share with you this big deck that we put together. We just went over a few select slides, but if Elon Musk is looking to take over Twitter, how does that impact Twitter? Is that something, that's potentially positive for the company? Is that something that you think is potentially not positive for the company? So that's the way I would encourage you to think about it, is how does this impact the basics of the company, and how will this change where the company is a year from now? So I think there are there are also a whole series of headlines on other companies too, that may make you, ask about the stock. So going back to Apple, Apple's in the news quite a bit whenever it releases its new iPhones or releases a new product. And that could be something else as well. When you see that headline about Apple releasing, to be honest, I'm not even quite sure what they could come up with. I feel like they've come up with everything, and even things I didn't even know I needed until they created it. But when you see these headlines, say, okay, is what they're doing positive for the company overall? And are they going to be in a better place in a year from now because of what they're doing today?
And one thing I wanted to add about Tesla that we didn't talk about, but I think it can be, it could be a bullet point to be added here with a company. Some companies become cult stocks because of their leaders. So Tesla, we didn't talk about Tesla, of course, because it's such an expensive, Teslas are not something that we can all afford today. But Elon Musk is a real visionary. And if you like him or hate him, right, he's changed the way we think about electric vehicles. And kind of throughout history, there have been these similar visionaries in the investment world. So, if you go back, to the early 1900s, think about Henry Ford, right, who developed the assembly line, and that completely changed the way cars were made. Or if you think about Steve Jobs, right? Steve Jobs made Apple what it is today. And so every once in a while, there are companies that are led by individuals that are so unique and have such a vision, and you may not agree with their vision, but they have a tremendous influence on the stock price. And Elon Musk is one of those people. And I mention that because it's worth following those kinds of people, even if you don't agree with them, because you'll learn so much from them, right? I mean, Elon Musk think of what he's done for electric vehicles. He has this satellite system, this low orbit satellite system. He's got the Boring Company where they're trying to build tunnels right under California so that you don't need to drive in traffic. But if there are a handful of those individuals who are worth following when you can identify them. And that's another way that you can make money. Charles, what do you think?
No, that definitely answers my question. But I guess to the point about just do you think this will have like effect within like the next year? Is it definitely a good
It could.
advice?
It really could. It's a question of, are you talking about Twitter now?
Yeah, but also just in general.
Yes, it absolutely could. It could lead to a bidding war with another company. The risk, though, is Twitter doesn't really have a huge amount of value at the moment because they don't really monetize their business very well, right? Because it's basically a free platform. And so if Elon Musk walks away and they reject his offer, that stock could drop like 50%. So that's right, because it was a terrible stock before Elon Musk got involved with it. And another thing and actually this is a really, if you remember one thing tonight, this is what I want you to remember. There's a difference between a great company and a great stock. So you may love the product. You may think that it's just you may think Twitter's the greatest thing in the world. But unless the company can make money and it can't be easily duplicated by somebody else, and you're paying a reasonable price for that company, it could be a terrible investment. And so we want both. We want companies that are good companies and that have good potential. We want their earnings to go up every year. And we want them to be reasonably priced. So what we're talking about tonight are companies that have some appeal based on certain demographics. They do have strong financials because we've already vetted them. And then we can talk further about whether they're a good thing to buy today. But this isn't meant to be an all-encompassing list. It's meant to kind of just get you thinking. And so what the homework assignment that we would give you, and hopefully Isabel will let us come talk to you again, is using this list maybe as a starting point. Are there other companies that where you're spending a lot of time and money, and you notice your friends are spending time and money? And I'd ask you to keep a list, like try to identify 4 or 5 companies, and then send them to Isabel, and Isabel can send them to us. And then we can talk about those next time. And then we can talk specifically about how to value a company and how do you know when it's a good time to buy it. And I just want to ask about one more because it's the obvious one for young people your age. What about Instagram and Facebook?
I use it every day.
Same.
Yeah.
I
So do
think
you-
they kind of stole the thunder from Snapchat once they added their stories feature. And I think that's the reason why I don't use Snapchat as much. And they've
Mhm.
added their whole like e-commerce piece to it too. So to Karen's point of like linking like makeup and fashion trends, like you can do everything on that app and it's a little scary.
And do you like Instagram and dislike Facebook?
Yes.
Yeah, isn't
I
that
use
the-
both.
I'm
I know
sorry.
the outlier.
I'm sorry, Isabel.
I use both, but like I use
Yeah.
Facebook mostly because a lot of my international family uses it.
Yeah.
Mm.
Do you have a negative impression of Facebook? Because of Mark
Mm.
Zuckerberg? Do you feel he's
Not so much because of him. I think it's just it hasn't kept up the way like Instagram has. I think there's a lot of new features that they try to plug in there sometimes. I think it's confusing.
do you think they're not a good corporate citizen? Like does the whole privacy issue, does that bother you guys? Yeah. So I know we were talking before about, trying to meld in a perfect world, companies with good financials with companies that are good corporate citizens, right? Facebook is really, Facebook used to be such a widely respected company. And because of all the privacy issues, their reputation has really taken a hit. And it's actually hurt their stock price, right? Because a lot of investors won't own Facebook now because of how they've addressed privacy issues. But on the other hand, it has now become so because Instagram's so popular. And do you watch Reels?
Mhm.
Do you think Reels is so? TikTok originally, right, was was more popular than Reels, and so now they've tried to remake Reels to make it more competitive with TikTok. Do you feel like it's become more competitive?
I just see those TikTok video end up on Reels. So it's like the
Oh,
same.
is that right?
Yeah.
Oh, interesting. Interesting. That's one way to deal with it. So I don't know if you want to have Facebook on your. I throw that out because that's right. Instagram is such a popular app. Okay, so your homework is to identify 5 companies, either from our list, or your own list, or a combination thereof, that based on your own research, you see people spending their time and money and resources at those companies. And then we'll put them all together, and then we can talk about them in the context of, are they good investments, and how to create a portfolio of stocks like that. And I'm going to tell you, there are prizes. So because we want you to become good investors, we all like rewards. And at the end, so I don't know how many sessions Isabel will let us do, but if we do 2 or 3, we will have gift cards for everyone as a reward for participating, because we really want to encourage you to learn. By the end of this, we want you to be able to identify like 4 or 5 stocks that would be good investments and where we think you could hold on to them and make some money.
I have
Yeah.
a question. So like one of the 3 things that you said is that does the company make money, and then
Yeah.
can it be duplicated? But the third thing you said is that is the stock reasonably priced?
Right.
How would you gauge that?
Sure. So that's a really good question. And we're gonna talk about looking at the companies, how much they earn relative to their share price. And that's often referred to as a price to earnings ratio.
Mhm.
And you don't, let's move that to next time, because that's a whole nother conversation. So the first conversation is, let's identify a handful of companies that you think you're interested in. And then we'll look at them and determine whether are they good buys today, based on the business that they're in, based on the competition, and based on the price that you would be paying relative to the earnings. Okay, but that's the hardest part of this whole, kind of, you've hit on the most important part and the hardest part. And I have to tell you, that's as much art as it is science. But it's the absolutely best question.
It's like a cliffhanger.
One,
We're like,
It's a
you have to come
cliffhanger.
back.
Exactly.
so one last thing just to address, I know a few people brought up in the very beginning that they're looking for a resource. Is there a resource that has videos and visuals and so forth? So I'm going to share my screen real quick to show you something. It's called Napkin Finance. I'm on their website right now, Napkin Finance, and they have all sorts of topics here. So if we just start here with, I'm going to click on investing, if that's what we've been talking about today.
Mhm.
Oh, look what it is, Apple. So it has a whole series of these visuals, how to choose money market accounts. We've spoken about that. Anne-Marie just talked about PE ratios. So these are all great little one-pages. And then under the resources tab, they have a whole series of videos.
Are these all free?
Yes, that's not.
Huh.
So yeah, and so if you're looking for a resource now, and this is also a resource a little bit different from maybe some of the others that, you know, they're just trying to put out quality material. They're not trying to get you to buy anything. So Napkin Finance, that could be a good resource for you all to have.
And maybe look at the one on stocks. The one there, because they had a lot of different, just not that you don't, I mean, of course, if you have time, look at everything, but if you have limited time, look at the one on stocks. And that's a good point. Just kind of remember that everybody's trying to get your money. And so just be skeptical of everything, just of everything. Like, be skeptical of email attachments that you open, skeptical of, I don't know about you, but I get a gazillion text messages asking me to confirm things on my phone. Like, don't do it. Like, there are so many, we talked about like protecting against scams. Every time you click on something, it could be a potential scam. And right, scams are so, like, one of my really good friends who's in my industry got scammed out of $500 because somebody called her to say that her bank account had been compromised. It was a scam. Right? She gave him her username and password, and she knows better. She's in the business, but I tell you that not to shame her, but just to tell you how easy it is to get scammed. So if in your mind, you assume everything is a scam as your default position, then you will pause before you click on something. So never open an email attachment that you don't recognize, and never click on a text message that you don't know, and don't answer the phone from people you don't know. And if you do answer the phone and they tell you there's some sort of emergency and you have to confirm your bank information, 99.9% of the time it's a scam.
I've also had that happen to me where I got a text saying that my credit score went down by a lot, and to click on a link. And instead of clicking the link, I just like ran to my bank and I was like, oh my gosh, what's going on? And they were like, yeah, we would never text you that. So
yeah, banks do not text you. It would come through a website and it would be official looking, right? And the address would match the name. That's the other thing, like the addresses don't match. So just your default position on everything, particularly if you have older parents, is it's a scam. And don't click. Anyway, on that happy note, well, any parting questions? Are you guys clear on your homework? Yes, one.
Okay, I have a lot of questions.
Go ahead.
First of all, how do we find out information about industries we might not necessarily interact with much? Like, for example, something like healthcare or banks or oil, something that I may not see particularly as much, but should still acknowledge and keep those in mind.
Okay. I don't know, but we'll come back to a research. That's a really good question, because
Resources for things outside.
Wall Street kind of puts firewalls up on research to make you pay for it, and we'll see if we can come back to you with like a. Oh, you know what good resource is? Motley Fool.
Motley Fool.
Motley, Motley, Fool. Do you know them?
No.
Oh,
Thank you.
they're actually a local company. Oh, you should get them to come talk to you, Isabel. They're a great, they're actually a great organization, but they have some good research. Some of it you have to pay for, but some of it is online. It's a really good question, and let us try to find out. Broad industry research is actually hard to find for free. So let us come back and see if we can come up with something for you. What else?
So also, what about companies? Well, I know the market in general is just speculation, but take, for example, the big drop that happened with Netflix. Like, you think everybody has Netflix, but you also see like the current streaming where it's like, well, that's more about how volatile it is. That's not much of a question. It's more of a comment.
So no, everything's not a speculation, right? Netflix went down because their earnings were a disaster, and their future guidance indicated that they were losing business.
Yeah.
So remember, we talked about the criteria for a good company is where earnings are going up consistently. So Netflix is the opposite of that. It used to be their earnings were going up consistently, but now there's so much competition, right? Because there's so many other streaming platforms. Is it, use Hulu or Amazon Prime, right? Or Peacock, or Prime Video. I mean, there's so many that it's almost become ubiquitous. And so their whole business model has changed, and that's why the stock went down so much.
Okay, and my last question has to do with like dividends on stocks. And
I love this guy. Is he a plant?
like, what are your thoughts? Like, how much should you lean into it? Should you look into ETF to have like a good balance of both? And just
So
like
I'm gonna ask you to, that's a really good question. And it's worth a further conversation. So let's hold that for next time. So companies that pay dividends are more mature companies that have good balance sheets, and they can be very good investments. And we will include a discussion on dividends and how to think about them when we chat next time. So how do you make money on a stock? You make money on a stock by it going up, and you also make money on a stock through dividends. So that's a great question and is worthy of a much further conversation. Thank you for those questions. They're terrific.
Thank you.
Okay, anything else before we sign off? Okay, your homework. 5 companies.
I'm sorry, I have one more question if
Sure.
you have time. So I was asked in the chat, but like, where can we find a company's sort of annual revenue, and then how do we compare it with their stock to sort of see if their stock is sort of too pricey for their revenue, or like we should,
Right. So that's what we were saying. That's a really good question. And we'll help you with that, because it's not that easy. Everything has to be in context of the industry and how other companies look. So we'll talk about how to think about valuing a company and whether it's a good buy or not. So that'll be one of our major topics for next time.
Sorry, when you say next time, you mean next week, Thursday, same time?
No, well, Isabel will give us another
Schedule
session.
it.
Oh, okay.
So next week is
Give
with
us
a
2
different
more,
presenter.
Give us 2 more, Isabel.
So typically, to give you all some background, we've done these like 3-part sessions with Anne-Marie. And typically with our high school students, actually. So this is the first time we've kind of opened up the session to everyone else. And so I'll nudge you all, as well as the rest of our community, to see when might be a good time. We don't have it on the calendar yet. And then we'll cross-check with Anne-Marie's busy calendar as well to see when.
I'm really happy to do it. Well, because plus we got to get these guys investing.
Now you left us like on the cliff, so.
The cliffhanger.
We want to know.
And also one last thing, read read the Wall Street Journal, right? Read the New York Times, read Bloomberg. Those are great resources that, don't read the op-ed, don't read the opinion pages, right? Because those will take you down a rabbit hole, but just read the financial news. And you know what else is really good? Do any of you listen to Robin Hood Snacks?
Mm-hmm.
Oh, I love
on Spotify.
It's at their podcasts, and I actually love them. It is owned by Robinhood, but they're 20-minute podcasts each day, and they talk about 3 things that happen in the stock market, and they're extremely entertaining. And I always learn something. It's a completely different angle, but if you want to be a good investor, you have to be engaged and you have to read about what's going on in the world. So read the Wall Street Journal, just look at the front page, the New York Times, the Wall Street Journal, Bloomberg, and Robinhood Snacks is my fun recommendation as a podcast.
One more question, or actually two. One is like, do you have any book recommendations? Or, and then the second question is, will we get an email for the next meeting?
We'll give you an
Yeah,
email. We'll
I'll
put some,
have
we'll put,
scheduled.
Isabel will do that and we'll send you some book recommendations. And if we come up with any other apps or any other tools. So we'll follow up with Isabel on that.
Thank you. This has been very helpful. I mean, I've never thought about stock, about like the stuff that you're buying and investing in the company that you're buying. So it's actually really is an eye opener. Thank you.
It makes it much more accessible, right? Otherwise, it's just kind of pieces of paper. So if you can kind of relate to, okay, I go into the Apple store, it's always crowded. They just come out with this new product. I can't get it. The store is mobbed. Those are really good clues as to how the business is doing, right? And so we can do our own research sometimes. We don't necessarily have to rely on Wall Street. So I'm glad. Well, great. Well, we so look forward to talking with you guys again, and we'll follow up by email. And do your homework.
Thank you.
Companies.
Yes, you have.
Okay. Bye-bye, guys. Nice to chat with you.
Thank you.
Bye-bye.
All right, please complete that survey. Oh, everyone left. I'll email them. I have this book. I have these books in the office. Oh God. It's called The Little Book of Common Sense Investing. If you want one, email me with your address. Here, let me turn off my screen.
Really? Thank you.
And we'll send it to you. Yeah, I'll email to everyone else since everyone hopped off early. But we have a bunch of these in the office. So we just went back to the office like 2 weeks ago. So we've been cleaning out and just, I think this is an older book, but I just looked up at the reviews and it's like a 4.6 out of 5. So I think it's so good.
Wait, what was it
so yeah,
called? I'll put it in the subject.
The Little Book of Common Sense Investing by John Bogle. And it is little. It's not like a huge dictionary. So, so yeah, email me your
Awesome.
address and I'll send it to you all. I know we're kind of all scattered out, but I figured we have them in the office and they're just collecting dust. So, and Karen,
you
yes,
so
to answer
much.
your question, we didn't have anything scheduled with Marie later on, but she's like super into like helping students and talking about this stuff. Like this is her passion. So I think what I'll do is just look at our CDI calendar, put some dates out, maybe send a poll out, and then same thing with her to see what works best. Like she said, she typically does this as like a 3-part. So we'll probably do it later, like May, June, trying to work around graduations too. Because you're graduating too, right?
I'm actually taking an extra year.
Okay,
But-
so you're not graduating yet. But I know next month was crazy, so.
Is. But also I wanted to ask. Yes, this